a day. Very nice. The beginning of the week. It is Monday. We still have 4 more working days to go with the markets open. You know.
I don't know what you want. Let's have a bit of fun till I downfall.
Okay. Let's start. What's up, everyone? Good to have you here. Good to have you here on a pumpy Monday, at least for now. So let's cover the charts. Of course, in this live stream, we're going to cover Elliott Waves, right? As we always do. I do have to keep an eye on my other second screen here in case a video on WhatsApp or an email comes in, because we are trying to buy a house at the moment in the south of France, and we are chatting to the agent, or not buying, but a rental. Because we first gonna rent before we buy, hopefully 1 year later or 2 years later. So I'm just keeping an eye open if anything comes in. How you doing, everyone? How are you doing? Good to have you all here. Serga, Papa, Christian, Hiop, Manotav, Leva. Welcome. Good to have you here as well. Mido. Gonna cover that, of course, with regards to the triangle. Now the general tip, and I'll probably repeat it later, is as long as price is pumping on volume, wait for a range to form. From an Elliott Wave point of view, all the information for either up or downside and probabilities locally happen in the ranges. As long as price is pumping, it's pumping. You know, as long as price is dumping, it's dumping. It's the range that will give you all of the information next. So that is also pretty much the conclusion already of the local analysis, but we'll go in a bit more detail, of course. So, Rostam, welcome. Maybe a Band-Aid. Good morning. Hopefully had your nice coffee after TPing or looking at your winning positions. TXM, good to have you here. How are you doing, man? It's been a while. Hope you're good. Jeremy, Incredible Sub-Zero, what's up? Crypto Wave Rider, thank you, Ash. Themistocles Castellana, good morning. Have a nice and positive June. Exactly. The month just started. GP Trading Queen, how you doing? Birker, Emra, Sam, welcome. Pete Dumtree. Samurai playing on repeat the coming hours and days. For real? I would get tired. I like it as a live stream starting like... Wait, 1 second. Oh, package delivery. Got something new. I'm gonna show you. But I need a code. I need to give them a code. What code? Sorry for the beginning of the stream. Let me quickly take a picture. What a beginning of the stream. So hectic. Out of nowhere, package arrives. Okay, be right back. Whew, what a workout, yo. Running up and down. Oh man, wait 1 second. I'm too warm now. Ooh, what a start. What's up, everyone? Got a package, yo. We can check the package later. Because we first want to start with the analysis. Jeez. Good morning, Harut. Could the triangle already be finished? I would then count it differently because D and E in here, it's very small, but it's always a possibility. It's just ratio analysis wise, not very nice. With regards to the caps, they will go out tomorrow or Wednesday. Tomorrow or Wednesday. I'm trying to finish the playlist as quick as I can, which is a bit in a hurry. So there's a brand new playlist coming on the channel, which is going to be educational for all of you. And I'm working on the thumbnails. So all the videos have been made, but I'm working very hard on the thumbnails the whole day today as well. I want to make it very nice, you know, so it's coming. Whew. And then the caps and stuff is it's going out. Yeah, it has to. Almost finished prepping as well. Crazy Potato, welcome. Bettina, Maria, Cheese, Umar, what's up? Mark, how you doing? Let's start, shall we? Let's start. And we're going to start on the higher time frame. So locally, right? Again, I'll just mention the tip. As long as price is moving up on increasing volume, from an Elliott Wave perspective, waiting for a range is the best thing to do. As long as price is pushing, there's literally nothing you can really do unless going with the flow, of course, but only the ranges will give you the most information. The impulses don't actually give you most of the info. So we had a sharp move down, but then the range will give you the information of what might happen next, right? Sharp move to the upside. The range here, gave us the information of what's next. So with regards to price action here, as long as price is pumping, volume is moving to the upside, we're either looking for a C or a 3. Just wait for a range to form, and the range will give us all the clarity. Now we have passed the resistance here at about 69,600, and there is not too much I have up here until 71K pretty much. If I open all of my folders, then you can see all the levels on the chart as well, right? So the next area here, daily naked point of control. And then above that, we have daily naked point of control again, but we get close to the high at 72K. So yeah, but from an Elliott Wave perspective, let's first go to the 12-hour time frame and put everything off. Oh, by the way, before we go into Elliott Waves, have a little look at the range here as well. So the point of control acting as support, put this on 300. And now we're back at the value area high once again. You can see a big amount of volume here, right? Pretty much like the point of control is only, of course, this red line, but it's all high volume here. So interesting. Okay. Zooming out then to the weekly time frame. So we're going to cover the weekly, daily 4-hour, and then we're going to continue to keep an eye on what's happening on the 50-minute time frame as well. Okay. So stream time 14 minutes. Perfect. Cheers, Tails. I'll make sure to have a look at the title. No. The reason Elliott Wave comes first is because that is what's covered in the in the video, so it has priority. That's the analysis style. Yeah, I'll think about it. There's always things to improve. Okay, we're gonna cover the folders that I have over here. There's gonna be overlap with the video I made earlier, but of course we have some new price action locally, so that's gonna be quite interesting. The other folders, we'll probably go through them relatively quickly. On the weekly time frame, your most bullish scenario is a triple 1-2, 1-2, 1-2, 1-2, finished, all the 2s retracing to the 382 Fibonacci, which is taken from the low of 1 to the high of 1, right? Low of 1, high of 1, low of 1, high of 1. And then eventually you're looking for a big wave 3 towards the upside. That is your biggest move, most commonly at least. Highest amount of volume, biggest extension. So if price then breaks out, what we want to see is volume moving up, right? We want to at least, like this volume bar here should be small if you go into a bigger wave 3 towards the upside. Now, preferably in this scenario, your wave 2 here is finished. Of course, this is your most bullish scenario, but by all means, you're looking for eventually the high to be broken, all-time high, and then we'll take it from there step by step. Locally, over here, we have an impulsive structure to the upside. Now, this 1, 2, 3, 4, 5 wave structure is your most bearish bullish scenario. Let me explain. Because after wave 5, you expect a retracement, right? So this 5-wave structure on a higher time frame can either lead to another wave 4, which I will cover in a little bit, or this is your wave 1, you look for a 2 and then continuation up in another 3. So that is like another 1, 2 on the higher time frames. Your most bullish scenario here is a 1, 2, 1, 2, continuation up in 3. But anyway, first things first, we look for this scenario here because at the moment it has higher probabilities than a double 1, 2, right? 1, 2, 1, 2 and a big 3. But by all means, you're looking for a breakout. You look for the highs to be broken eventually, and then we'll take it from there step by step. So here we don't want wave 4 to move to the downside and touch the high of 1 at 65.5K. That is the invalidation for this particular scenario. Target area for 5, 1.236, 0.618. Now the 1.236 is taken from the high to the lowest point of wave 4, giving you a target at 73.3K, and the 0.618 is your highest target for 5, taken from the low of 1 to the high of 3 to the lowest point of 4, 75.8K. Because wave 1 and 3 are quite similar in price, it increases probabilities for wave 5 to be the extended wave. Usually in an impulsive structure, at least one of the waves is extended, meaning it is much longer, higher amount of volume than the other impulsive waves. And your impulsive waves are 1, 3, and 5. So because wave 1 and 3 are quite similar in length and 3 did not really expand, right, extend to much higher prices, the opportunity is there for a wave 5 to do that, even though it is rare. So the target for an extended wave 5 would be the 1.618 at 91.3K, taken from the low to the high of 3 to the lowest point of your wave 4. Interesting. Approaching 100K in that case. Bullish scenario locally for a wave 4 would be a triangle. Now price has been moving to the upside, of course, so I quickly gotta adjust my lines here. Chuck, 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 boom, buff. And this is a wave 4 scenario, but still bullish. And the reason this is a wave 4 scenario is a triangle is not allowed to be in a wave 2. So you can't have a wave 1, 2 triangle, 3, 4, 5. So a triangle can only exist in a wave 4, and that is one of the scenarios we keep an eye on. If price moves to 70.6K, however, it's invalidated, right? We get some more information. So what you're looking for here is an A, B, C, D, and then eventually a wave E to the downside. Price currently hit the 886, which is a less common target for a triangle wave D, taken from the start to the end of your wave C. And after wave D, you want to see a wave E to the downside, which should be a 3-wave zigzag structure. A 5, 3, 5 impulsive move to the downside, and then you continue towards the upside. Close eyes on the invalidation, 70.6, 66.5K, currently a bit of resistance at the 886. Your second bullish scenario here on the weekly time frame is an impulsive structure to the upside in yellow, 1, 2, 3, 4, 5. But then inside wave 4 here, we either are finished or not yet finished, right? That is the question. It doesn't really matter because a wave 4 can be quite long. Target area for 4, 382.05, taken from the low to the high of your wave 3, 57.5, 53.3K. The 0.618 is your invalidation at 49.3K. Right? So here, what we're looking for is a wave 5 to the upside, a 1, 2, 3, 4, 5 wave structure. And then when your wave 5 in green is finished, it finishes the bigger wave 3. And when wave 3 is finishing, you look for an even longer range in a wave 4. So the rest of the year you'll be going sideways pretty much, right? So you have your push to the upside, you finish your 5, and then you go sideways pretty much the remainder of the year for your higher degree wave 4. Now commonly a wave 4 is longer in time than a wave 2, and this wave 2 over here took from the 10th of April till the 11th of September, so you can get a bit of an idea with regards to time what is possible, right? And this, however, was quite a long wave 2. Now, because of the rule of alternation, if a wave 2 is shallow and long in time, shallow being a 382 retracement, a wave 4 has a higher probability of being shorter in time and deep. But short in time is still at least 1/3 of the time it took for this wave 2, which is still a few months. No? So you'll be going sideways for a bit, and then after wave 4 you expect a final move to the upside in a wave 5, right? Locally, for a continuation of this range, the bearish scenario remains the zigzag 5 wave A and a leading diagonal 1 2 3 4 5, 3 wave B looking for a 5 wave C, right? As long as price is not taking the high here at 72k, this scenario is still perfectly valid. This move to the upside counts much better as a 3-wave structure compared to a WXY scenario, which some of you may have seen in the past in my videos as well. Of course, I always had the zigzag on the chart as well and always showed it. But if we're looking at a WXY, let me actually put it on the chart and explain why I don't show it anymore. So in a WXY, you have a regular flat W, expanding flat X, you look for a wave Y. Wave X here is in this case an expanding flat ABC. Your wave C has to be a 5-wave structure, 1 2 3 4 5. The problem is your wave 4 is a lot shorter than your wave 2, which is uncommon, as most commonly wave 4 is longer. And your wave 4 did not even hit the common target area for a wave 4, which is the 0.236 to the 0.5 Fibonacci taken from the low of 2 to the high of 3. So this being a finished 5-wave structure has lower probabilities than this being a 3-wave structure. And with that conclusion, this would be your bearish scenario, where this then is your 5-wave leading diagonal wave A, zigzag B, and you're looking for a C to the downside, right? Now in this case, we then continue the range, move down towards the 50s. Common target for C is the 1 to the 1.236, taken from the start to the end of A to the end of B, 54.6, 50.5k. Preferably, wave C is finishing after the 382, taken from the same pivots, start A, end B, 8th of June. So preferably your C is finishing at least after the 8th of June. Now, for a wave C, we need an impulse to the downside. So in other words, we would need a wave 1, a wave 2, then a big 3, still a 4 and a 5. So the 8th of June will not be any problem if price moves impulsively to the downside. But we're going to zoom into that local structure now, because there's only 3 bearish scenarios that can get you down there on the lower time frames. Either a impulse 1 2 3 4 5, where you don't want to see overlap between a 1 and a 4. Now, at the moment, there's lots of overlap here, right? So we don't have a 1, 2, 3, 4, 5 clearly. Okay, so we're not going to think about a normal impulse here. So that means diagonal or double 1, 2. In a diagonal, we're looking for what you see on the chart over here. And with this push to the upside, it definitely looks a lot less nice as it used to do. So it does lower the probabilities. The invalidation for this scenario is the high of 2 at 70.6k. Same invalidation as the triangle, remember? So that's quite interesting. And your common target area for your wave 3 is the 786.886 trend-based subextension from the start to the end of 1 to the end of 2. 66.1, 65.5k. Preferably, your wave 3 is not hitting 64.9, as that would lower the probabilities. In that case, if you do hit 64.9, the probabilities will be higher for a 1-2-1-2 continuation to the downside. So a bigger impulsive structure to the downside, in other words. As long as a scenario is not invalidated, it's not invalidated, right? We hit the 886, but we didn't take out the high, so that would be something to look for at least. 70.6K is a very important like level from an Elliott Wave point of view, as it invalidates a triangle. Unless you come back down once more and then push, then it's perfectly fine to move up, right? But you don't yet want to hit this high here in a triangle. And in a diagonal, you need to still take this low. And I've been saying it in many videos and live streams. It's quite difficult to give the highest probability, the highest probabilities on a 4-hour time frame, which is this time frame here, to a bearish scenario, when that bearish scenario, this scenario here, does not even have taken the low of 1. It didn't even take this low, and we need a 5-wave structure. We need 3, right? So preferably, I start to look for diagonals when a wave 4 is in, meaning you have your 1, 2, 3, then a 4 and a 5. The reason I started to look for a diagonal earlier is because this move down looked very 3-wavy. This move up looked 3-wavy as well. And there's not much left when you have 2 of these 3-wave structures for, like, from a bearish perspective, right? Either a diagonal or, yeah, well, that's it, because in a double 1, 2 or in a impulse, you want to see impulses. Of course, lower degree wave 1 can also be a diagonal, but we're looking for this diagonal here. So yeah, important level on the chart. Now your alternative, most bearish scenario, is a double 1, 2. 1, 2, 1, 2, continuation down. However, if this is, and let me put it on the chart for the sake of clarity as well. So a double 1, 2 down, right, which would be most bearish, because then you expect a very big push to the downside. So if this is a double 1, 2, price has now hit the 886, and the 886 is a very rare target for a wave 2, common for a wave B or a wave X. So any move down would have a higher probability of being a C or a Y, and not a wave 3. So the probabilities have just gone down because price touched the 886 for this double 1, 2, which basically therefore means that your diagonal is the only structure, or you're still working on this bigger wave 2. Yeah, that's pretty much your. One second, I think compared to the diagonal, a normal 1, 2 probably has the highest probabilities in this case. Let me put a bit of makeup on the chart here. Little bit of live. Well, not necessarily analysis. Where 350. Always helps also with the analysis to make things neat. I like clean charts. We will talk about probabilities as well, by the way. Okay. So we hit the golden pocket for the second time now. Okay. Your wave 1 is a 1, 2. So I looked at this. Oh yeah, 3. And then either 4 is one of these. Doesn't really matter. Your wave 3 is not the low here. It's the higher low before, because you have a WXY in that case in your 4. Preferably your 4 ends here though, gotta say. Yeah, either one of those. So that's going to be your 1 with a extended 5th wave structure. And then we have our 2. Should finish soon. For wave 2, your common target is the golden pocket to the 786. 886 is rare. So again, take this high is important. You invalidate, of course, a bullish triangle and the diagonal shown earlier. But for this wave 2, you actually want to hit the 886. That would be your almost invalidation, because the invalidation officially is this high. But the 886, of course, is very rare for a wave 2. Let me actually color code this. Let me do that. There we go. Nice. Okay, so we have our wave 1. We'll then have to do a bit of searching for wave 2, but we can do that in a second. So this would be your low time frame bear. Probably higher probabilities compared to your diagonal, because you're so high now. And if this is an A, B, and then a C, in both cases you move down, but I would prefer the 1, 2 over the diagonal from an Elliott wave point of view. Okay. Looks neat. Okay, so with regards to the probabilities, actually what's happening locally is important for probability. So I might want to put some time into counting this here. Yeah, well, one thing I do want to say is, to be clear, the move of the lows here is not that great actually for an impulse, can't deny. This structure is incredibly long. It's such a long structure, and because you took the low here, right? So we took the low. It's also not like a 1, 2, 1, 2 continuation up in a wave 3. Now this is not a wave 4 compared to a 1 candle, or a wave 2 compared to a 1 candle 4, which completely is a wrong ratio. So I do have, I will continue to observe local price action, but I'm not too happy yet with the beginning of the impulse. It either makes me think of A, B, C, but this move down looked like a 3-wave structure on the 15-minute. Ending on the highest volume. There is at least the potential for 1, 2, 3, 4, 5, 2, 3, 4, 5. So at least there's a potential C wave here in a flat for then a wave A, B, C flat structure. In that case, you're going to be looking for a 1, 2, and then eventually 3, 4, 5. So that means that the moment price is touching the 618 at 68.4, impulse up is invalidated. I'm going to put that one in here as well. Because what you're going to be looking for here, if this is your wave 2, which by all means is a crazy long wave 2 in time. What is this? 11, 12 times longer? Oh. Let's start with 10, 12, 13. Okay, about 13 times longer than your first structure up. Time is no invalidation, but a wave 2 moving past a 6-fib time is incredibly rare. That is why, even though we move up and there's some volume coming in, how do you say that in English? I do watch out. What's that? Like I am careful. I guess that is what I want to say. Now, from a bullish perspective, if this is a 1, 2, then we can count another 1, 2 over here, right? And because we have 2 following ranges, we need at least another 4 and another 5. Because this recent move to the upside is then counted. You can't count 1, 2, 3, 4, 5 correction, and then what, right? 1, 2, 3, 4, 5. You wanted to end over here and start your range, but we went up again. So that can mean 2 things. 1, 2, 3, 4, 5. Or sorry, 1, 2, 1, 2, 3, 4, 5, 4, 5. So you want another high, and preferably actually taken from this. Or this move to the upside is corrective, not impulsive. And then it ends over here. And in that case, we're looking for a double zigzag or a zigzag structure. 1, 2, 3, 4, 5. Correction, 1, 2, 3, 4, 5. Wave A, wave B, wave C. You want to move down, right? And this is then a zigzag, which in a bigger corrective structure is then going to lead to a W, an X, and a Y. So in other words, we want to see another high. If we don't, and we move to the 618, it lowers probabilities for an impulse. So we want to see continuation. Also, the volume at the moment is in the high, right? The highest amount of volume is here. So if you're thinking impulse, right, then most commonly the highest amount of volume is in a wave 3, not in the high, right? So what you're looking for is a wave 1, 2, 3, 4, 5. Inside wave 3, we want this candle. Then we want to see a range in a 4 and another high in 5. Take the high, another high on lower volume. Seeing the volume in the high is something you typically see in a wave C, a wave Y, right? Those type of structures, corrective structures. So that is why, preferably, you're looking for a wave 4. Currently at the 382, your common target for 4 is this box. But you don't want to hit the 618. The 68.6, we don't want to go there. You first want to move up before you go to 68.6 at a later stage maybe. And if you want to play it more safe, you take the fib from this low here, 68.4. That's a level you definitely don't yet want to hit. You first want wave 4s. So caution. Just keeping an eye on price action here, right? And this is the common target area. So we can remove this. And then do that. A couple of clicks. Click, click, click. Very nice. So what we were doing is a bit of live analysis, of course. So in the bearish scenario, if that is the high of your 2, we need to count wave 2. So let me have a quick peek here. So we did hit the 0.7. So a double zigzag WXY, and then you need to move above here anyway, so that's not preferred. Okay. Okay. W. WXY. Your X is so you're looking for a 5-wave structure. Your X is a flat ABC. So you can end it at the first low or at the later low to make a diagonal in a 5. Doesn't really matter. So we have a zigzag, ABC and W, flat in X, flat in Y. Right? So that is your bearish scenario. And you want to finish in the target area for wave 2. Very nice. And in this case, of course, preferably we see 1, 2, 1, 2, 3, 4. 1, 2, 1, 2, 3, 4, 5, 4, 5. Yeah, so in the flat scenario, to make this the high, you have a 1, 2, very long 2, 1, 2, 3, 4, sorry, 1, 2, 3, 4, 5. So your 4 is very short. But because your long or your wave 2 is so incredibly long in time, your wave 4 has a much higher probability of being short in time. So in this case, you would have a finished impulse, 1, 2, 3, 4, 5, to finish a flat A, B, and then a wave C. It's literally one of the ugliest out there. Let's see if we take fib time from the start, C max, it is before the 2 here. before the 2, after the 2. Okay, so wave X goes here because you don't want wave C to be longer than twice the length of A plus B. Let me color code a couple of more stuff. To make things clear, a little bit of, hopefully you enjoy this as well, a bit of live analysis, and then of course we get to the probabilities. Up, make this green. And what you're looking for is A, B, C, up. Potentially already in or not. Stuff you'll figure out at a later stage, doesn't matter. And then of course your wave C needs to be a wave 1, 2. 1, 2, 3, 4, 5, 4, 5. Could be finished, or you want to have at least, you know, another range. 1, 2, 1, 2, 3, 4, 5, 4, 5. Yeah, it's something we at least have to keep in mind. 1, 2. One, two. I'm not sure if I have to remove my fibs, and the reason for this is that if you can finish a wave C here, 1, 2, 1, 2, 3, 4, 5, 4, 5, very short wave 4, but wave 2 is so incredibly long, increasing probabilities, wave 4 is very short. Of course, preferably, it's not your wave 4 because it is so incredibly short. So a 1, 2, 1, 2, 3, 4, 5, 4, 5 would actually be nicer. But wave 3 is not allowed to be the shortest wave. So if we do this, it's shorter. And if we do this, it's also shorter. So yeah, it can't be wave 3. 1, 2. Okay, so wave 3 is shorter than wave 1. 1, 2, 1, 2, 3. If this is your 3, 1, 2, 3, 4, 5, and we take the highest point to the lowest. Okay, yeah, so it can't be a double 1, 2 here. Wave 3 is the shortest. So in other words, what I checked is if this is a 1, 2, 1, 2, 3, 4, 5, 4, 5, your wave 3 is not allowed to be the shortest wave of a 1, 3, and a 5. So if this is a 1, 2, 1, 2, 3, 4, 5, this move has to be longer than either wave 1 or wave 5, but it's not. So that would increase probabilities for a 1, 2, 1, 2, 3, 4, 5, 4, 5 in your bearish scenario at least. So preferably the high of your C is in. Of course, in a bullish scenario, you want to continue building structure. 1, 2, 1, 2, 1, 2. And this is too deep now as well. We didn't yet touch the 886, but we're close to. We do have bullish CVDs. Oh, we have big bearish CVDs at the high though. Lower high, higher highs. Well, that has sorted itself out. So yeah, preferably. Of course, in a bullish scenario, you want to take the high. In the bearish scenario, you might have a finish structure. Bear. Sorry that it takes a bit of time. So a little bit less checking, a bit more focus. Touch the 236. Minimum target for wave 4 is hit though. So yeah, there is the possibility for a 4 Elliott waves. Rarely is perfect. Would of course be holy shit. Look at the wick. Oh my. That's crazy. Pretty nutty. So in your bearish scenario, nope. That is a minimum target for a wave. I have to up. Let's make this yellow. Okay. This is a minimum target in a bearish scenario, right? Because you're still looking for another 4 and a 5. Wave 3 most commonly is extended. Okay, put that there. So are we changing market structure here? Getting closer. Oh, what a wig. Okay. Fib speed. The speed fan, always a fun tool to use. You're above the 886 though. So it is a long range compared to your move down. Fib time from the start to the end. Wave 2 towards the 4. That's still okay. It's long. Make this green. Okay. So there you go. You see me at work. Desinnovation, yes, as long as invalidation isn't reached. That is correct. Okay, so and locally we got triangle. There's one guy that always watches live streams, and when I analyze, he always calls it analysis ASMR. I don't really speak a lot when I do my thing. You know, Elliott Wave takes time to think, or it takes brain power. Like I gotta think about what I'm doing. Okay, well, preferably this is of course your high, because if you go higher you pretty much hit invalidation. Common target for E is 618786, 68k to 673k, 05886 less common, 684, 67k. Let me put this in here. Yeah, I can imagine it's quite interesting in a way. Like, so usually of course this is stuff that I do in the background. However, so I went into the live stream without changing stuff from the morning update. So without updating my chart, because I've been so busy working on the thumbnails for the playlist that is coming online this week is the goal. And I should be able to do this. It's probably going to go live tomorrow or Wednesday. So I've been working hard on that and just putting all my hours into creating those thumbnails. Okay, so that is that. Okay, so let's zoom out once more. Pum pum. This is a backup scenario I also still have for a deeper wave 4. But preferably we first look at this one. And then if this one fails, that is when the second one comes up. So this would be 1, 2, 3, 4, 5. So then you get one more push to the upside in 5 instead of 2 more pushes in the other scenario, right? Up, sideways, up, 2 more pushes. And here you have 4, 5, 1 more push. So put that down there. Big bullish divergences though. But what I would be looking for now locally is we got to move to the downside, perfectly fine. CVD, I don't really, because all the bullish CVDs we had here already played out, and all of these pivots, these lows have been used for CVD divergences. I don't like to reuse them when you got to move like this to the downside. So what I'm going to be looking for now locally is I want to see price starting a range and preferably grinding to the upside. And as price grinds to the upside, I want to see consistently bullish CVDs. All right, so every time, so basically what I have a great example of this in real life, and the trade that I've taken, I'll show you. So what I want to see is then a move up, right, like this type of stuff, like these boring grinds, but very important, and then bullish CVD, bullish CVD, bullish CVD. Like I want to see a build up, and where I took a trade just because of that was here at the lower, was here. So on the lower time frame, if you go back to 56, 57K, this is mess, this is noise. I was not interested in trading. But then we got this. And we had a bit of bullish CVD here, and then price grinded up, move, and bullish CVDs. And that is the moment where you're starting to grind to the upside, and you start to build bullish CVD divergences as price grinds. And that was interesting. So that was the reason for me to then join there. Wow, what a wick, eh? Okay, so we forgot to talk about probabilities though. Pretty much. So your most bullish one is of course a 1-1-1-2. Now what isn't great about a 1-1-1-2 is that each wave 2 retraced to the 382, and the 382 is an uncommon target for a wave 2. It's no problem hitting it once, hitting it twice, but 3 times is exceptional, right? So it's not too great for the most bullish scenario. Now we know, we have a very clear invalidation. If price hits 65.5K, the probabilities will be much higher for bearish scenarios where we are looking for more downside to come, right? So that's a very clear invalidation, arguably your most important level on the chart at the moment, between being bullish and being at least short-term bearish, short-term meaning days / upcoming weeks, is 65.5K. And the probabilities, of course, the moment you take this low, that wouldn't be great, right, for the bulls, because you invalidate a triangle if you take this low. There's also not much support left here, so 66 point, what is this, 6K, preferably holds if you're bullish, no? So that is how probabilities change. The triangle here would be your bullish scenario at the moment, A, B, C, D, E. Preferably you look for a move down in E without failing. There is your low again, right? 66.5K. So 0.5, 618.786 is your common target area. So preferably you dip a little bit lower, but you don't want to see it lost. 66.6K. That is your important level here. In a triangle, 4 out of the 5 waves have to be zigzags, simple zigzags, either an ABC up, down, or an ABC to the upside, 5, 3, 5. So your wave D here has to be an ABC or a WXY, because if one of the waves is not a simple zigzag, then it is most commonly a wave C or a wave D. And the problem for your D is that we cannot count a nice simple zigzag in a wave A, B, and a wave C to the upside. Because if this was a wave C to the upside, then preferably we had a 1, 2, 3, 4, 5, and we would finish here. But we didn't. 1, 2, 1, 2, 3, 4, 5. Well, now the problem is your 3 is the shortest wave, which isn't allowed. So it's not great for D as in a 3-wave structure, because you need a 3-waver. So it counts better as an impulse to the upside with a very short 4 compared to a very long 2, instead of a finished A, B, C, and D. We can't really count D complex because your wave C here already has to be complex. A, B, C, and C is your final leg down here, right? So this is your final move down in C after B. Now when you look at this structure down, you can clearly see a 3-wave move. So for C, C cannot be a simple A, B, C to the downside anymore because of the 3-wave nature here, unless you end a corrective structure here. But preferably you would then count it a WXY double zigzag. ABC, corrective mess, ABC, right? The only possibility for C to be a 5-waver would be A down here at this low, W, X, flatten Y, that's your B, and then you have C. Quick measurements. We didn't even hit the minimum target for wave Y really, so that's not great probabilities that you have a WXY in here. So yeah, a WXY double zigzag would be better for wave C, but then you want wave D to be a simple structure, but the problem is it's difficult to count as a simple structure here. So yeah. Continue to observe as price is continuing this range here. It does impact some probabilities, but the clear invalidation is 66.5 or 76 because you're moving down now. Of course, in a wave E, we want a 3-wave structure down. So a 5, 3, 5, impulsive move down, correction, impulsive move down again, preferably hitting your common target area. And if price can finish today, let me have a quick look here because today is Monday, this is Sunday, Monday. Why didn't I have a daily naked point of control here? So your point of control, that is an interesting support level. Put this on the chart. So that is here. This was a bigger point of control here of this structure. We have passed this. Remove that. Remove that. Okay. Can we end a correction here and count this as a wave 1, 2 continuation? In that case, we need a W to the downside. And we need to have a wave X somewhere. So in that case, we then need a W, zigzag in W, a flat in X, and then a flat in Y, W, X, and then a zigzag again in Y. Let me check. W, X, Y. Even though you hit the 0.7, wave Y did not finish at the 0.7. It's only touched in the middle of your internal X, but wave Y didn't end at your 0. Okay, so the most bullish is, I'm gonna check this, W, no, never mind, can't be a double zigzag. Wave Y needs to go below W, so that's not even possible. Wave Y, so in a double zigzag you need Y to go below W. So that means that if this is W, X, Y, W zigzag, X can only be a triangle or a flat. Wave Y can only be a flat or a triangle. No, clearly what we're having here is not a triangle. W, X, W, X. Neither does it look like a great flat. In other words, it's quite difficult to end the correction at the current low. So either you go for the triangle. If that fails, it doesn't look too great, no? Yeah, 1, 2 from the high locally. 1, 2, 1, 2, 3, looking for a couple of 4, 5s, right? So preferably still impulsive. We would need to wait for some more clarity locally to try and look for ending structures here. Doesn't look too great to end something here in a complex structure. Of course, there's only a few options. You have a zigzag, a flat, a triangle, WXY, but in order for price to finish something here, you can't have a zigzag, you can't have a flat, you can't have a triangle yet. So of course in a triangle I have seen people count A, B, C, and then D, E, ending E here at this low. In that case, you're going to look for 1, 2, but then you want 3, 4, 5. And then this has to be a flat. So that would be your bullish in that case. So 1, 2, 3, 4, 5, either there or there, doesn't matter. 3 wave A, but then you want a B and a C and continuation. That's what you're going to be looking for. So for the bulls, this is an important level. I don't really like to cramp a D and E in a triangle in very short movements. This is your A, this is B, this is your C, and then you have D, okay, and then E. Good luck, crazy potato, yo. Good luck. So that is a very short E, but at least that would be a way to end a structure here. But it's still a triangle, and a triangle is not allowed in a wave 2, so that would mean this has to be a wave 4, and that would mean your next push up would then be a wave 5, and after that you expect a bigger range or a bigger retracement. So bless you, and bless you again. So yeah, look, price is falling, perfectly fine, no problemo. What we're looking for now is some signs of strength. No, first of all, moving above here would increase probabilities for the bulls at least, and preferably locally one would look for a bit of a grind to the upside, see some bullish CVDs as well. That would be nice. One, two, 1, 2, 3, 4, 5, 4, 5. All right, this wave 2 here is currently the biggest range we've had in this move down. So if we're impulsive to the downside, preferably you see a wave 1, 2, and still a 4 and a 5. So a wave 4 is matching this range in time. And therefore I put the 618 on my chart, because if you hit the 618, it lowers probabilities for a wave, or invalidates a wave 4. Which would be good for bulls. So yeah. So on the weekly time frame, when we talk probabilities for a second here, on the weekly time frame, the probabilities will remain bullish until you lose significant levels. And first of all, you need to lose 49.3k. Second, 43 well, out of my head, 5k or something. But your real invalidation is 38.5k. You don't really want to go down there. Like that would significantly increase probabilities for bears, and we're at 69k still, so cool. Right. On the daily time frame, we're either looking for a 1, 2, 3, 4, 5 or a zigzag to the downside, which very much depends probability wise on local price action. We are prepared, we have both of these scenarios ready, right? And the local price action here is going to guide us with regards to the probabilities. If you take 66.6, significantly increases probabilities for the bears, right? And price to move down. Taking this high would increase probabilities for the bulls again. Also hitting the 618 at 69.5k would be a small sign of hope before taking out this low here. A bit of an awkward structure to the upside here, but we continue to observe the local strength. No? And generally, probability-wise, one would have to say that as long as you do not take the lows, we can't be too bearish just yet. You still have the triangle. So the local levels of importance. So it's we got the move to the upside. That's nice. But now it's a bit of a patience game. Touch 68, 618 would be at least supporting the bulls. 1 2 1 2 3 4 5 4 5. It would be stupid if this is your wave 4 compared to this wave 2. That would again be a wave 4 that is much shorter compared to a wave 2. So, and it remains uncommon. So preferably it's then a 3-wave structure. But importantly in this range, 66.6k, 70.6k, 66 invalidates a triangle. 70.6k invalidates the diagonal to the downside. In a bearish scenario, arguably preferably your CY and therefore your wave 2 is in, and you're gonna move down. Now that does mean that your wave C is very awkward because of this very long range in then a wave 2 and a very short range in a wave 4, which from an Elliott Wave perspective looks absolutely ridiculous. But it's not the first time it happens. It's just very ugly. Very ugly. But taking out the high, 70.3, would reduce probabilities for the bears. So yeah. Bit of live analysis. 67.2k. Yeah. 1 2 ending on the highest amount of volume. That's not great. 1 2 1 2. Yeah, and you hit the 618, so you can't count 1 2 3 4 5 because the 618 is touched. So you can only in the bulls count another 1 2 up if in the most bullish scenario, or of course wave E and then up. Side note that next week on the 12th we have so much news that I won't be surprised if we are still gonna range in this sideways 72 66k area till next week Wednesday. That would be a shocker if that happens, but yeah, this might lead to some a volatile price action and a breakout. ABC in a wave C of a triangle, yes, but yeah, not too happy with this impulse. If this is an impulse, 1 2 3, this has to be your 4. One second here. 1 2. Even in a double 1 2, 1 2 1 2, if you count some sort of diagonal in that one. Oh, 2 of course has to end here. But then from this low, we have to count an impulse, and that would mean 1 2 3 4 5, and then this preferably is a flat A B C, finish C, and then move up in your bullish scenario. And therefore we then want to hit at least the 618. 1 2 3 4. Oh, actually go down once more wouldn't be a bad idea. Point of control still quite low. On the higher time frames, we still have bullish CVDs everywhere. and they only play out if we take 72k. Okay, we're at the 05. So yeah, let's see what price is going to give us locally, right? Bit of volatility, perfectly fine. And there is no problem with volatility. We just use all the new information. So for your most bullish scenario, this is what you want to see. And in that case, you then have a couple of 1-2s here. So you have your 1-2, 1-2, 1-2, and you want to see continuation. In that case, this high is labeled as a wave B. So you have ABC, flat, up. So probabilities for that increase, right? Take the high, probabilities increase for the bulls. Take the low, probabilities increase for the bears. Huh? Yeah, what can we say? Let's go into chatting. You guys have been so patient. Cool. We were... Yeah, so... Yeah, the reason I use Elliott Waves in my title first is because that is the core content. Yeah. What's up, Roy? From the Philippines. GT Sleeper. Krawit Sritula. Sure. Always a pleasure. I enjoy doing it. It's great to see that all of you enjoy watching it as well. So it's a pleasure. It's a pleasure. Do you use logarithmic chart to draw channels and trends? I don't really use channels much. Not too big of a fan of channels, to be honest. I prefer to have horizontals instead of diagonals, and usually channels always have of course in ranges, corrective structures, if you look at a flat, you usually pull a horizontal one, but I prefer looking at horizontals. But on a logarithmic chart, if you are on the higher time frames where log is relevant, then yes, you would draw a channel in a log chart. How do you label B, C of the triangle? Those have to be simple zigzags, ABC 535. Questions about the alts would be for altcoin Sunday. What's up, Stefano? Oh, alt season. Yeah, I'm not really familiar with alt season. What's up, Alexandra Tom? Always a pleasure. Thanks for popping in and showing some appreciation. Thanks, guys. Very kind. That's just basic fundamentals. Is it going to zero? Matty being cautious. Always good. Being patient. Yeah, that's also almost a signal. No? Be patient. Be careful. Know what you're looking for. Know how probabilities change in your favor depending on what price action shows. Yeah. Bobby, how you doing? Yeah, correct. Same the other way around, of course. Like having quick moves down can catch out people in longs. Why can't the wave 4 be a WXY with flat in Y, which just is 90%, and now we move down for C of Y? So what you're looking for... Oh, yeah, but then what I'm looking for with the WXY is trying to end the correction here, or maybe even here. But if you still go down and then up again, it's the same price movement as all of the other scenarios, and because it's the same thing. However, you would have a W. This would then be your X, And you are then looking for a flat now in, I guess, A, B, and then a wave C, right? Now, the most common flat is an expanding flat. And an expanding flat, if this is, wherever your A is, I mean, I can put A here. Your minimum target is the 0.9. Okay, that's touched. Your most common target, expanding flat is most common, is all the way up here, 71K, 72K. Now, for the sake of this being a potential regular flat, you are then looking for a 5-wave impulsive move to the downside. 1 second. Fly 18 and back on 25. Yes. Sorry, just chatting to my wife there. If you would count this A, B, C, of course, A and B have to be 3-wave corrective structures. C is an impulsive structure to the downside, right? Now, in a flat, preferably your C goes below your A. Oh, by the way, this has to be the low of your A as well, this one here. Because it is incredibly rare to have a flat ABC inside B of a bigger flat. That's very, very rare. So you would never look for that. So therefore, this is the low of your A. Now, preferably your wave C goes below wave A. Now, there's, not necessarily a big problem with your wave moving below. There's just not too much support. And if you do hit 65.5, all the probabilities for the bears increase. So knowing that the most common flat is an expanding flat, target up here, then a regular, which is less common, and then you have a running flat, which is very rare. Wave C moves below wave A in a expanding and regular flat, which are the two expanding most common, regular, less common, uncommon. There's not much support left here, and we have 65.5, which significantly lowers probabilities for the bulls. It's not too great. So preferably, if you do WXY stuff, you already have a low. Yeah. It's nice to keep an eye, of course, on what's happening on YouTube. Yeah, there is the potential golden pocket and continuation, but in a triangle, your waves can move to an 886 and reject. It's just a less common. Like preferably you reject in the 618 to the 786 area, but the 886 is still a target for D. And I think we may be at the golden pocket. Would be quite funny, of course. We are just below, actually, just below the golden pocket. Yeah, I agree, Crazy Potato. This structure here, I did, like, on Saturday, it felt like having holiday. I didn't do shit on Saturday here. I was just watching. Actually, like during the day sometimes, because I was out and about having dinner with the family and stuff. So yeah, nothing happened. Very ugly indeed. Transnaria, how you doing? It's nice to see people come back after a while again. Welcome back. Good to have you here. Yeah, it's so fun to watch you doing it live. Cheers, Coffeeholic. Yeah, in live streams I can do that stuff, of course. Doing some live analysis, changing the charts. I'm not trading until we leave all time highs behind us. It's never a bad idea to wait for clarity, right? So you have trading and you have gambling. Now, if you have a plan and you have a strategy and you trade your plan or your strategy, right? And your strategy, there is no problem taking longs and shorts at wherever price is, as long as it's part of your plan. If you are FOMOing, if you realize, let's start there, but if you are FOMOing or YOLOing, or you're like, oh fuck, I'm missing out and all that stuff, then probably you're the person that bought right there. So of course, on this channel, I sometimes say, and also in videos, we don't YOLO, we don't FOMO, and we don't catch knives. Unless catching knives, that's an exception, is part of your plan, which likely means you're going to be using order flow, some CVD, tick charts, the DOM, some more experienced stuff instead of just a trend line, or usually you want to look in the candle to have the high probabilities of catching those knives. So trade safe, trade probabilities. If you don't know what's going on, just wait. As a trader, it doesn't matter where price is. You can trade Bitcoin at 80K, you can trade Bitcoin at 40K. It doesn't matter, right? It's all about percentage. If you're a long-term investor, then it matters, right? Because then you want price to move up. But as a trader, you just wait for the ideal opportunity where the probabilities are in your favor, and that's when you put the trade on. A county inspector being on time and did his job quick. I must have slipped into the twilight zone. Maybe a band-aid. You're having a great day, eh? Yeah, look at you go. On the 3-month time frame or 3 minute? I guess 3 minute. But so on the 3 minutes, there is a little bit of bullish CVD, high low, low low, but this is still premature as well. So would be good to have some more info. But as price is ranging here, at least CVD moves down. So that is something, no? Continue to observe. We're below the golden pocket. So let me actually put back this wick on the 4 hour. Yo. Lol. Also, by the way, with what I said earlier, if you are in a trade, either long or short, and there's stuff happening on the charts, and now you're not confident anymore, or probabilities have changed, or you're insecure, like you see signs that go against your trade, there's no problem just getting out, even if it's 1-to-1, or you don't even have profit at all. It's a break-even trade. That's perfectly fine as well, of course, because you always want to trade the next good probability opportunity. So if you're in a trade, probabilities are on your side, you're long or you're short, perfect, good, everything is running, but then there are signs on the chart that might invalidate your idea, it's countering your idea, or something happens on the chart and it doesn't match with what you think would have happened in your in your plan. Just get out. There's always a next one. And the next one might be in 15 minutes, in 30 minutes, 1 hour, 2 days, 1 week. Triangle is still valid, yes. Cheers, Donovan. Yeah. Well, yeah, we spoke about probabilities, so it's definitely 70.3K is important for the bulls, yeah. Now that's bearish, Mark. Cheers. Yeah, the 618, that's correct. So we can't label this a wave 4. Right? We didn't hit this 618, but we did it this one. So that means we can't label this a 1, 2, and then whatever, 3, 4, 5. So therefore, if you're looking for a wave 4, then this would be your 1, 2, very ugly 2, but nonetheless. And then you have your 1, 2, 3, 4, 5. So impulse finish here, right? Internal. So in other words, 1, 2, let's keep it easy. 3, 1, 2, 3, 4, 5. Okay, yeah. 1, 2, 3, 4. And you still want to look for a 5 to the upside, hitting 71K. In that case, your 4 is a flat. Which also means, by the way, I should actually do this. And then do that, and then do this, and then do that. And then do this, and then do this. 1, 2, 3, 4, 5. This is then a B high in that case. This is arguably your most important area of support, because this now works as an order block. And if you do move up, you're either going to be looking to end the wave 5 at 71k and then retrace, or this is another 1-2. 1 flat in 2 continuation. In the bullish scenarios, right? In the bullish scenarios. 1, 2, 1, 2, 3, 4, 5. Quite a shallow 3. Yeah, there is the potential for double 1-2 behavior. If you do take this high, then 71k, of course, is very close. Good area to observe the reaction. If this doesn't offer any significant resistance, then, I mean, 73k and eventually all-time highs is pretty close, no? Step by step. E is a possibility. In that case, we need a 3-wave structure to the downside. Talking about that 3-wave structure. In that case, preferably, you still get one more low though. 1, 2, and then a 3, 4, 5. This is then your A. You want to see a 3-wave B. And then another 1, 2, 3, 4, 5 in C, and then boop. And then move up. What I think is quite interesting on the chart, it doesn't have to mean anything, but we didn't actually took the monthly naked point of control at 67.2k. Now that's interesting. We made 2 higher lows on top of the daily naked point of control that we had at the high of this box. Quite interesting. Wave 3 can't be an ABC, no. Unless you are talking about diagonals. In that scenario it can, but that's not what we're looking for in this move up here. Yeah, preferably your first, like, the first structure down is quite a sharp move. But if this is your 2, then you can see we never really had a range the size of 2. In this structure down. So of course one could think, okay, 1, 2, 3, 4, 5. Not ideal. Would prefer than ABC, but you know. We are currently ranging at the 0.5, which is the max target really for a wave 4. The 618 would invalidate a wave 4. It's very early days, but you do have order block, higher low, lower low, both on blue and yellow. So that is a bit of bearish CVD, but or a bullish. And if you take the high, that played out. Now if you range to the downside here and then create bearish CVD, that would have a higher probability. But we didn't yet get a range to the downside, no? So yeah. Having a 3-wave move down here would be quite interesting, no? Pretty much the box. Right, Ace. What kind of ranges do you use to recognize the point of control levels? Usually you use the tool randomly, although a 1 candle displacement could affect the result, right? It might look random, but it's definitely not random. So with the ranges and the volume profile, first of all, if you select a range, right? I have a volume profile video on my channel, by the way, so you can check it out. Now, let me pull this one here. So you can see the volume profile now. Let's put it on 148, right? I can also pull, of course, a smaller one. And of course, I want the volume till the last candle, right? I can also pull another smaller one. Now, in this range, because I'm interested in the whole range, doesn't really matter. I can even can include a part of the upper portion here, but your point of control is always going to be around this level. So I do it very quick. It might look random, but of course it's not, right? I have a lot of experience with the volume profile. So your point of control beginning to the end of the range and to the beginning. Now on pulling volume profiles, what I like to do is I pull them from the first candle opposite to the move to then the end of the range here. It depends a little bit on the range that I am tracking. So for example, if we go to a 12-hour chart, this whole range, I pull a volume profile from the first red candle to the end. That is the area that I'm interested in. Price came back to this range many times, eventually dipped below and then continued to the upside. So that is what I use for my volume profile there. And yeah, I bet some people have other ways of pulling stuff, but everyone for him or herself, of course. But it is definitely not random, and it serves me well, and that is most important, because in the end it's about me winning. And in the end it's about you winning. But if you win, someone else has to lose, no? So I've been volume. I love volume. I'm a big fan of volume levels. Really enjoy the volume profile as well. It's one of my favorite tools that I like to use. So yeah. You can always watch the volume profile video as well on the channel. Why can't we be in the sea of okay, I answered this one, yeah. Manage the position. Andrei Querti, it's time for you to then look for another channel. If you want to have potential trade entries, then feel free to click on the upper link below, which is the Koen Setups and Ideas channel, where I discuss ideas and setups. And in the content, I do not talk about setups because you, sir, need your own plan, which also means that in the setups channel, there is no financial advice. Those are Elliott Wave ideas. I don't necessarily take all of the trades, but they are good trades from an Elliott Wave or potential setups from an Elliott Wave point of view. If the reaction I look for is good enough, I'll take it. If it's not, then I don't take it. But I do share ideas and setups, and luckily for me, most of them play out. But I always look for reaction with the other tools that I use. Second, if you don't enjoy all your 100 possibilities that you have seen in this video, then go somewhere else. I really don't bother about you going or leaving, fuck that. So either you appreciate the art of Elliott Waves and me explaining stuff about different scenarios, explaining what has a higher probability, lower probability, explaining why a scenario has a higher or lower probability, and actually get yourself some brains, or just leave and go to McDonald's. What's your thought on LUBs? Altcoin questions is for Sunday. So I'm not really involved with alts. Usually I analyze them on Sunday though. Why is Bitcoin being weird? Yeah, it's complex price action. It's a sideways complex range. But then again, if there's no clear clarity, you just wait. Oh, second thing about this, by the way, hey, Andre, if you're still here, if you're still hanging out after what I said, would be quite nice. I clearly communicate in all my videos also how probabilities change depending on levels that are hit or not hit. So look, it's very simple, right? Either stay or go somewhere else. I really don't care. I'm not into that sort of shit. You want trade entries? You go to the Moon Boys. They'll give you trade entries. And they'll get you a red wallet as well. Is it possible to have an A, B, C, and C? No, wave C can only be a 5-wave structure. So both in a zigzag and a flat. So in a zigzag, you're looking for an A, B, C. C has to be a 5-waver. And in a flat, A, B, C, also a 5-wave structure. So whenever you want to put a wave C on your chart, it always has to be a 5-wave impulsive structure. Right? It always has to be a 5-waver. What's up, Dave? How you doing? Nuzli, welcome. Can we gold where... Can we... I'm not sure what you mean with the question here, but, you know, with regards to... I already explained, I'm publicly sharing Elliott Wave trading ideas because... So what I noticed is many people learn Elliott Waves, but trading Elliott Waves is that's again a whole level. Like you can analyze, that's one, but actually trading it and how to trade Elliott Waves and why is a setup relevant or not relevant, I tend to get these questions like also here in chat, and that's no problem. So what I then did is I made a channel in Discord and Telegram where I explain why a potential setup that might be about to form, right? And I put the position on the chart as well. The stop loss and the target is completely random. You know, it's just about the actual setup. I explain why a setup is interesting. So I put the picture on. Let me actually show an example as well. Let's go to my Koens Setups channel in Discord. And then we can open this one for starters. We can open this for starters as well. And just for the sake of an example, let's put some more on that were recent. So a potential swing trade opportunity put in the group, and I explained why that is. So when posting this, I then explained the why. And where is it? Oh yeah. Zooming out and taking probabilities into account, this is pretty much the only setup I'm interested in for now that was at that low. Swing trade in this case, unless locally we get strong signs against the trade. Hit invalidation and bear scenarios have a higher probability. So yeah, just enough for your information. With bullish CVDs everywhere, blah, 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 blah. So I explain why is this potentially interesting. All of these, I explain why potentially interesting. If I have a loss, I have a loss. But I don't communicate if I trade a setup or not. I communicate this is an interesting one from an Elliott Wave point of view. Depending on local price action, I will then take it myself or not. I'm not here for people to click their buttons. You know, they need their own plan, their own strategy. I don't care if they lose or win. I have a potential Elliott Wave idea. I share the idea. I share the why, right? Why is it interesting? And then if price approaches that level, I will look for the reaction that I want to see. And if I see what I want to see, I enter. If I see, or if I don't see what I want to see, then I don't enter. But that is a personal choice for everyone for themselves. So if someone trades based on a potential Elliott Wave idea and it fails, it's their problem. If I'm not in the trade and I didn't see what I want to see, then yeah, clearly that wasn't a great idea. Or it was a good idea, it's just that once price was there, it failed to show what I wanted to see. Luckily though, most of them play out nicely. But then again, we don't do signals. I explain why. I don't write down entry, stop loss, target. You know, I explain why is this interesting, because I help people to fish, you know, not give fish. I don't have any New York Stock Exchange. I wouldn't know. I'm not into the stocks though. What's up, Izzy? Caught up on 125. You've been doing good. Wave 3 can be a leading diagonal. No. Wave 1 and 5 can be diagonals. Wave 5 would always be an ending diagonal. Wave 1 a leading diagonal. Wave A can be a leading diagonal, and wave C can be an ending diagonal. What do you deem the probability of currently being on a higher degree to? in that case, you're going to be thinking about the triple 1, 2, and I shortly explained it. So on the, oh, wait, I'm not sure if you're talking about the weekly or the 4-hour, but let me cover both to answer the question. So on the weekly, having a triple 1, 2, where all the wave 2s retrace to the uncommon target of 2, which is the 382, is very unlikely. So it does reduce probabilities for a triple 1, 2 compared to other impulsive structures, which is either 1, 2, 3. Sorry, lol. I have them here. Either this one, log chart, right? Or this one. And on the 4-hour time frame, let's see if I still have this in my folder here. No. Oh, here. So a double 1, 2 here. First of all, if wave 2 is a triangle, that's an invalidation for a wave 2. Wave 2 can never be a triangle. Can be anything else but a triangle. Now, triangles are very complex. There's definitely WXY possibilities here as well. But at least that's something I want to say. Now, secondly, when we think about a double 1, 2, the ideal scenario is that you have a wave impulse up in 1, then you get your wave 2, then you get your second 1, second 2, maybe a third 1, and then you move. Where each next wave 1 and 2 preferably is a bit shorter in time and price. That's not, these are the grinds that I talked about earlier, right? I want to see price grind towards the upside, preferably have some bull CVD as price is grinding. That's usually what happens in like those 1-2 type of structures. So that would be ideal. Now your second wave 1 here, which is a lower degree wave 1, as the highest degree is in green, 1, 2, 3, 4, 5. Inside 3 we have blue, 1, 2, 3, 4, 5. So blue is a lower degree. And when we think about Elliott wave degrees, also therefore preferably your second wave 1 and 2 are shorter in price and time. Your second wave 1, however, is longer in price and in time compared to your higher degree wave 1 in green. And your wave 2 is now also longer in time. Not actually sure if it's bigger in price. We can take a flip. Yes, it actually is as well. So wave 2 is also bigger in time and price, which reduces the probabilities for a double 1, 2. It is not an invalidation, but it does impact the probabilities negatively. Now, in an impulse up, 1, 2, 3, 4, 5, as well as a double 1, 2, 1, 2, 1, 2 continuation, you're going to be looking for price to take the high. Now, what is nice in that case is that after price takes the high in those two scenarios, we just observe. Because if this is a double 1, 2, we want to see a very big S3 to the upside, high amount of volume, impulsivity, parabolic price action, never looking back. We want to move up, 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 and then eventually get 4, 5, 4, 5, and the impulse get a bigger move to the downside again. In a wave 5, your volume preferably is not going to reach these levels. So you're going to make another high, start to retrace, and that new high has a lower amount of volume. That is when we start to think about a potential end of 5 and down. So in both cases, you're looking up. The difference is going to be the reaction once you go up. And that is where risk management comes into play and knowing what you're looking for. We know the target for a potential wave 5 in the bullish scenario. Where is it? Here. So this will be an area of interest to observe what price does. Now, as always, once price starts moving on volume, you have to wait for a range to form. And then the range, at least from an Elliott Wave point of view, that is recommended. And then the range will give you everything that you need to know. That's the range. You can use the range to reassess probability. So in other words, if price moves up, and if we pump mega hard into this wave 5 target area, we just look for continuation. But if price is going to move up and starts ranging here, potentially a 4, take the highs in a 5 and reject, then this is going to be quite interesting. No? So it's going to be what's going to happen in this area. And based on the reaction, we readjust. Potentially wave 5 can be extended because 1 and 3 are quite similar in length, and then 91.3K is your target. So of course that is also still a possibility. So on both time frames, weekly and the 4 hour, a double 1-2 is not looking great. On the weekly, because all the wave 2s hit the 382, and on the 4 hour, because your second 1-2 is longer in price and time, even though it's a lower degree, wave 1 and 2. It does happen. It also happened when we moved up from the low at 24K. We had a double 1-2 there, where your second wave 1 just nipped the 1-to-1 trend-based flip of the first wave 1. In other words, in normal English, your second wave 1 was just a few dollars higher than your first wave 1. And your second wave 2 was longer than your first wave 2. But it was a double 1-2. It's just probabilities. The probability started to change at the lows at 24K for bullish behavior once we started to move up after the second wave 2 with bull CVD and volume coming in. That's when I switched. $12 more likes to the 100. One more now. Bearish probabilities are higher. No, arguably the bullish probabilities are higher unless you take 67, well, to be real, 66.6K. If you hit this low, that is when you switch. It is quite difficult to label higher probabilities to the bears if we did not at least take out 66.6K, 66.3K. So that also means that locally we need to see signs of weakness. We have a bit of a drop, but guys, this in the bigger scheme of things is absolutely nothing, right? We are still waiting for more structure to come in as well. We observe the drop, but the probabilities are bullish unless you hit 66.6 or 66.2K, or of course we start to form bearish market structure with some big bearish CVD divergences, which would be nice as well. But it's no problem to have retracements, and we continue to observe local price action because there's always that potential for the bearish scenario, preferably your high is in for C. So what's more important now is we have a move to the downside, cool. If price takes this high, probabilities increase for the bulls. If price takes this low, probabilities increase for the bears. Very clear in what we're looking for. If price takes this high, triangle invalidated, leading diagonal 1 2 3 4 5 invalidated, right? If price moves to 65.5K and impulse up 1 2 3 4 5 invalidated, double 1-2 not looking too good. So that increased probabilities for the bears. So it's very important to know the levels, what to look for. What is your ratio of long to short trades? It depends. So depends on the market. In a bull market, my longs will be, I will have more longs than shorts. I mean, arguably, I don't know what I did. 1, 2, but this, of course, I don't know if I count the losses then as well. This was, what is this? Beginning of May. 1 long, 2 long, 3, 4, 5. 1, 2, 3, 4, 5. Lol, nice. Short. Oh, look at me. I'm shorting this market to the ground, shorting everywhere. And then this was, of course, a long. No, I guess. I mean, this is only from like pretty much the last month. So, yeah, my ratio. I'm never really interested in the ratio, but we're in a bull market, so. For example, I had a long here, I had a long here as well, and I just held on to these, and I didn't short in the structure to the upside, and then eventually I was on holiday here, so I went out of the market. I just sold everything, and then I came back and price was here. And then what I just showed was, of course, this piece of the chart. So I guess what I'm trying to say is, these sort of structures, I'm not a big fan of shorting, but once we enter bigger ranges, I go short and long, whatever. Yeah, no problem there. So I don't know my exact ratio. It's not something I find interesting to track because I'm very much trading both sides. But generally in a bull market, I would guess my longs are higher because once price starts trending, I won't go into shorts until we form bigger ranges again. And that is when I'm interested in shorting. And at the moment, we're still in bigger ranges. So whenever there's a short, I take it. There's a short. Would a high above the B not invalidate the triangle? That is correct. And that is, of course, a great question. Only thing WXYs in that case. So complex sideways structure. I find that CVD divergence on the 1-5 time frame often play out opposite, except in what do you think about price manipulation? It's just I think the problem is getting experience with the indicator. So when you see CVD divergences on the 1, 5, 15, 30-minute time frame, you can't trade every CVD divergence, and if you would, then you would be a negative P&L. It's about context. If you're at support, you want to see bullish CVD. If you're at resistance, you want to see bearish CVD. So that is what you want to be looking for. So what does CVD show you in confluence with other tools? I personally use 3-minute, 15-minute, and I use it very effectively. So for me, it's an indicator that, for me, it's the best one anyone can use. But it's all about context, because you can't just use like CVD, like when you're pumping, right? Probably on the lower time frames here, you're then going to be seeing bearish CVDs because price is moving up and CVD shows market orders. So if there's a lot of market buys coming in, you might see a bearish CVD here, but you're in a strong move to the upside, right? So what you're going to be looking for is at least a grind to the downside with consistent bearish CVDs and not just one bear CVD while you have bull CVD. Also on the 15-minute, that said, bullish CVDs locally played out, by the way. We have, again, bullish CVDs here as well. Higher low, lower low. Now, before thinking about, I mean, everyone has their own plan. But for me, this bearish CVD is not interesting. It played out, price moved down. But what I want to see is at least more structure. It's context. Yeah, everyone has their own way, I guess, as well of using CVD. But you can't trade every divergence because you'll be a losing trader. It's about the context and how you use CVD in confluence with your other tools. What's up, Raquel? Welcome back with the family. What's up, family of Raquel? How are you all doing in the Philippines? Lunchtime. Have a good lunch, Adam. Okay, let me be quick here. I think I'm pretty behind here. You will, Maddie. You will. Matter of time. Matter of time. Cheers, Casper. What's up, BNB? How you doing? Offline every Sunday. Every Sunday is Altcoin Sunday. So every Sunday I pop on the stream and I go into alts. Any thoughts on my Wyckoff distribution plan? Oh, wait. Pixel, is it possible for wave 2 to break the, no. No. Wave 1 low is never allowed to be broken. No, so that's a hard rule. Yeah, in Elliott Waves. Any thought? Yeah, tag me in Discord and I'll be happy to check it out in Discord. If you want to learn more on Elliott Wave on Coins Offline, I recommend just click on this shorts playlist. There's tons of... Yeah, I have a couple of shorts. And everyone that is here, this week I will launch a new playlist, which is hopefully gonna teach you a lot about Elliott Waves. It is a full educational playlist. No holding back. Everything is in there, and I'm gonna reorganize a little bit of the memberships where gold is gonna be all about requesting feedback, checking charts, some private live streams, but it's coming. And I've been working really hard. So all the videos are done. I can add some, but those are not core content. So all the patterns, Elliott Wave structures have been done. I'm now working on all the thumbnails. So each video will have a thumbnail where I also design the individual structure on the thumbnail. So yes, offline. Cheers, Yusuf. Okay, cool, Leva. I'll make sure to put you in there. I'll check my email later today. Do you see Elliott Waves in your dreams? I'm never really good with keeping, like, remembering dreams. I don't know, man. Like, can't answer the question. What I do notice is when I started the YouTube channel and eventually you make all these videos, I do instead of chance, I do tend to say probability a lot more in real life as well. Instead, like, oh yeah, there's the probability of, because that's what I always say in videos. I say the word probability instead of there's a chance that, there's a probability that. I think that we have finished the triangle with E at approximately 67.2k. That would be down here. And then we have a clear upward impulse with an extension in wave 3, visible at the 5 min. Extension in the 3, 1, 2, 1, 2, 3, 4, 5. I think I see what you're looking for. 1, 2, 1, 2, 3, 4, 5. Wait. So you're looking for a 1, 2, 3, 4, 5, I guess. And then inside 3, 1, 2, 3, 4, 5. And then a corrective move to the downside, preferably. Yes. I'm not too sure about ending a triangle here because wave E is so short, but it has potential, right? But in that case, wait, I actually think I have it. Yeah, here. So I have it here. Let me remove this. So in that case, this is what you're going to be looking for. It's interesting because the price action between many different bullish scenarios is exactly the same. So in this case, if this is 1-2 continuation, you want to see the drop, right? This drop, at least we got this drop here. So you want to see the drop. If you're looking at the bullish scenario for a triangle, you want to see E and move up. So it's the same price action. It's the confluence between the scenarios that is important here. Yeah. In the bearish scenario, preferably your high would be in here. You want to move to the downside. But yes, Bettina. Yeah. 1, 2, 1, 2, 3, 4, 5, 4, 5. 5 does end on high volume, bit tricky. But then, yeah, corrective move to the downside. And there's the potential, because we did move up to hit the 618. So on the lower time frame, it's an ugly impulse down. If this would be an impulse to the downside, we want to actually see a wave 1, 2, and then a wave 4 that is somewhere the same size as your 2. The only way to do this would be to grab these two ranges together in either a running flat or a WXY or whatever, right? This is 1 minute time frame stuff. So it's not a nice impulse. Preferably we had a 1, 2, then a bigger 4, and then a wave 5 to the downside. So yeah, there's the potential here for a 3-wave move. And if corrective, it increases probabilities of the bulls, of course. You hit the golden pocket now as well. You didn't yet hit the 0.7. So for a double zigzag, that would still be positive. But of course, your support area for the bulls would be this. Yeah. If the triangle broke from downside, confirming we could have ending diagonal ABC as 1 WXY, 2 around 64K, ending diagonal 5. But that would only be a possibility in a bigger high time frame daily WXY. So let me have a look here. So you're looking for ending diagonal wave 2 wave 2 around 64K. I don't know what 64K, like, I don't know what you mean. 1 WXY, which would probably be this move down as your A, does, by the way, to be clear, in an ABC where wave C is a diagonal, your wave A in a zigzag, if you're looking at this, at least A, B, and then a diagonal, your A needs to be a 5-waver, not a WXY. And wave C can only in an ending diagonal happen in a wave, in a flat, if your wave A is a three-wave structure. So if your wave 1 is a WXY, your wave, we could have ending diagonal ABC as 1, WXY as 2. I have no idea. I would need to see a picture. I don't really know what's meant. From the recent high today, this one. Yeah, I think Dara is talking about another one, no? So if the triangle breaks to the downside, yes, then 1 WXY, oh no, ABC is 1, okay, yeah, WXY is 2, okay, and then 3, 4, yeah, but as an ending diagonal wave 5. But that's the thing, ending diagonal wave 5. Oh, now, I get it now. Okay, wait. But this is going to be an expanding diagonal, so that is very rare. Oh, okay, I know what you mean. But 1, 2, yeah. The problem is, where is it? I parked it down here. This is going to be your ABC in that case. So you're not even close to finishing, right? Your diagonal that you didn't talk about, ABC. So this is only A, because you can't have a 5-wave structure by itself. It always needs a partner leg. So if you're looking for a diagonal where this is then your 1, 2, 3, 4, 5, right? Because that's what I guess you're talking about, an ending diagonal overlap between a wave 1 and your wave 4. And then this is the end of your 5, and then you move down. This, first of all, is going to be an expanding diagonal, which is very rare, never preferred unless all of the other scenarios fail. Secondly, your wave 4 only works on, this is only wave A. And then we still need a B, and then still need a C, and then still move up. So it's going to be a huge structure compared to your wave 2. What's up, Andy? How you doing? Now that the 618 up is taken, B potential, yes, Sam. So I don't really want to be too involved with local price action due to the impulsivity. This is 3-minute counting, and I don't really like 3-minute counting. But arguably, if this is a 5-wave structure, then you expect a B and a C, yes. But yeah, it looks a bit 3-wavy. If this is your 1, 2, 3, you can either label it a wave A or a W. And then you're going to be looking for an X and a Y, right? So either sideways WXY or sharp WXY. For a sharp, you don't want to hit the 0.7 preferably, which is sitting just above price at 69.8. And for an ABC, you're looking at a flat. A, B, C, continuation. That would be nutty price action as well. Of course, most bullish is a finished 3-wave structure, and up you go, of course. But yeah, there is the potential for a B, but that a B would mean B in a flat A, B, C, or a zigzag A, B, C. That depends on how you then count the first structure down. Doesn't look like a great impulse. I would like bigger wave 4s than 2s. What's up with the wave 4s? Where are wave 4s, yo? But yes, Sam. So there is a potential for B and then C, yeah, in a continuation of the range that would eventually be bullish, of course. So if you label it A, B, C, either flat or zigzag, you would expect continuation to the upside after that correction is finished. So yeah. Now with regards to counting here, I do prefer to stick on the bit higher time frames. So generally I don't go into 5 3-minute time frames because things change so quickly. It's very messy, generally. So I personally like to stay on 50 minutes or higher, and the more complex price action becomes, the higher the time frames is generally recommended to keep it simple instead of becoming lost. Cheers, offline. Yeah, actually, we did alts on Sunday, right? Where's my... So on last Sunday, we did Ethereum, Solana, Matic, Doge, DOT, YGG, Jasmy, and IOS. So those have been done. The video before that, we did, so the week before, SEI, Ondo, RNDR, DOT, PETH, Bonk, KDA, and Matic again. And then, I don't know, the ones before, I already threw these papers in the bin, so I don't have them anymore. The timestamps are there. I think, I'm actually not sure. Did I put the alts? I think I put them in the title of the live stream, no? 1 second. I'm gonna have a look. Boom. Yeah, I put it in there. ETH, Sol, Matic, Doge, Dot, Jasmy, IOS, yeah, YGG, yeah, okay. Put it all in there. Would you say after this market movement, the odds of going higher is higher than going low? Generally, until you at least take out 67.2k or 66.6, that would be the probabilities. So we continue to observe local price action. So yeah, I am very patient when it comes to this type of stuff. I don't. So we've been in this range for a long period of time, and I have traded this range all over the place, but I don't want to over trade it. And the moment, so yeah, price is moving and all good, all fine. But there's always a new opportunity if I wouldn't be in a, so I'm in a long, but I'm managing it well. I mean, already break even, so whatever. And if I get stopped, I just wait and see, and I'm very patient. There's always a new opportunity. It's trading is about risk management. It's covering or making like it's thinking about your losses more than potential winners. How much are you going to lose if your stop loss is hit? So I'm being very careful now in the range. The probabilities are there, but I would like to see now 70.3k taken, including 70.6 if we can, to increase bullish probabilities. If you do move down to 67.3 and then 66.6, it will increase probabilities for the bears. But with all the bullish CVDs that we have as well, pretty much everywhere, and price did not manage to at least take out 66.2k so far in this range. Generally, you would say, well, probabilities would be higher to move up unless you start to see weakness, which starts by taking out 67.3k. Now, that doesn't mean, I just go YOLO long in a big dump, but it does mean that I have plans to look for opportunities towards the upside. And once I see clear signs of weakness, that is when I switch. I'm very easy to switch. Yeah, or you have a short wave 4 in the impulse, of course. But yeah, generally I would like a bigger wave 4, yeah. Siwadol Matayakul. I love the probabilities from Koens and make my own decision based on my pre-plan, and that's what I like to hear. It's enjoying the content, seeing what's up, but always have a plan, strategy, preferably one you, of course, made yourself, and be profitable. Do you count Elliott waves on mountain ranges? Tarun. Well, I have counted waves in different occasions. Because it's interesting to see if it works in other structures, but like other scenarios, like a mountain range can be funny, yeah. But I once did an Elliott Wave count on my viewership numbers in the past, or my subscriber count or something. Enjoy maybe a Band-Aid. Unless there is a missing 4. Yeah, I mean, we didn't even take the low of 1, right? From the recent... Oh, here. Yeah. Yeah, in that case, you would only have a 1 here. Oh, I see Dara. Up. I see what you mean now. This is what you're looking at. Preferably 618, but let's put the 05 there. That's fine. 382 would be very shallow though. And then you look for a wave. A, B, C, boom, boom, boom. There we go. And there you go. That is what you're looking at, Dara. You do have the time for it, so time-wise, that it would be no problem. The only problem is that as nice as this scenario is, it doesn't have the highest probabilities because you can only give this highest probabilities after a wave 4 would be finished. That is when you can really start looking for it. Because you only finished a wave 1. So of course at the moment, there's not yet any reason to really put this on the chart and label this a high probability scenario, because there's higher probability scenarios, impulsive structures, WXYs, continuation of the range in an ABC. Only if you get ABC, 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 ABC. This is the moment where probabilities for this scenario then switch to a possible highest probability, depending on the structures. And then we look for a 3-wave up in 5 and a big retracement, yes. But for now, it's too early. It's too early. It's a fun idea, can't deny, but it's too early. Yeah. What's up, Holton Totten? Welcome. Altcoins are for Altcoins Sunday. Same here. Sorry if you already mentioned, but how waves would be expected in an E for the last wave? A simple zigzag. Thanks for the content. Appreciate you giving time. Pleasure, Joe. Pleasure. Now, in a triangle, you want to see a simple zigzag here. So a 5-3-5 wave structure. Now, your first move down here doesn't look like a nice 5-waver, to be honest. It looks more 3-wavy, right, than a 5-waver. Where's our wave 4? Is this wave 4 compared to 2? In that case, your 4 is shorter than 2, which is uncommon. So the probabilities would be higher for this to be a 3-wave structure. So it doesn't really support a triangle too well. You can move down here, but in that case, the alternative scenarios are actually more bullish, where you could have a 1, 2, 3 in the bullish scenario instead. In your bearish scenario, you don't really want to take the high. So you want to see a simple zigzag, A, B, C, but yeah, the first structure down looks more 3-wavy. You can still get a diagonal, 1, 2, 3, 4, 5, but it's too early. Then get a B, then a C down, and then move up. An EFT deposit. Oh, no, I never had that issue. Bitcoin had another swing. You mean on the 15, like locally? Because here I don't, you know, or this one. Yeah, you can count 1, 2, 1, 2, 3, 4, 5, 4, 5. The problem is 1, 2, 3, 4. Oh no, that works. Yeah, so you can count an impulse to the upside. So that can work as an ABC or a 1. Yeah, ABC is better, man. Like 1, 2. So in the bearish scenario, you actually want this to be a C. but it's not looking too great, because then you need a 1, 2, 3. This has to be your wave 4 and 5, but 4 is significantly shorter than 2, so it does reduce some probabilities for the bears compared to the bulls. So in that case, triangle or 1, 2, and 3. Highest amount of volume in the high is something I never really like to see for an impulse. But your lower time frame structure so far looks corrective. So we continue to observe. Adam. Yeah. You know, you're just in a zigzag. You know, you're in a wave 2, man. Wave 2. You're in wave C of a zigzag to the downside in wave 2, and you're gonna get your wave 3 next. On wave 3 on the high time frame. Yes. $76,950. $76,950. So yes. Interesting. What's up, Caleb? Challenger Draven. Yeah, possibly. At least, possibly. So look, the thing with terminology is you can't use will, you can't use it should, it will, it can't, it can't. Like it's always probabilities. So yes, there are probabilities to move to 67 and still be bullish, right? The 786 is here. You have a little bit of support, 67.7, which is quite low, to be honest. But it's just observing, no? Bearish CVDs locally here played out. Yeah. Yeah, I agree. It's great training in looking for three-wave structures. I don't even know what an impulse looks like anymore nowadays. Yo. Cheers, Adam. Have a good one. Have a good one. There is not much support. That's true, Alexis. Yeah, I mean you have, yeah, what's this? 67.7. That is of course quite low. There's no higher point of control. Nah, all the point of controls are 67.7. So we are now at the value area high though of this lower range, acting as support. Your first and pretty much last area of support is here. Lose this, you're at the point of control, but that's of course very deep if you're counting a wave one. Yeah, it's 886. That would be rare for a 2. So consider liquidity. If yes, how do you trade together with CVD? I don't. Well, I identify areas of interest regarding liquidity by just using Elliott waves, I suppose. So interesting highs and lows from an Elliott wave point of view. You know, that's what I use. I mean, you can use Elliott waves to identify, of course, in a way, liquidity areas due to the counting, but I don't use heat maps or liquidation maps or those kind of things. So I use volume, but I don't use those type of third parties, I suppose. Okay, what a day. Yeah. So after 2.5 hours, I think it's good if we come to an end now. If we finish that wave 5 now and it isn't an extended one. You will, like, if wave 5 finishes, then yeah, you'll be sticking around in the 70, like the 80 to 65, 60K area, but you wouldn't expect to really go below 60. But if you go into another wave 4, a wave 4 of a higher degree likes to retrace to a wave 4 of a lower degree. So the wave 4 price action is between 72.56. So that would be your support area for a higher degree wave 2. For a bigger wave 2 though, if you finish a 5-wave structure and you label it a wave 1 and then go down for a wave 2, then yeah, you can just pull the fibs on your chart, no? So in that case, you then pull it from the low to about 76, and in that case you have 64, 63 as a golden pocket. Yeah. Holding Bitcoin or not is all about your own plan. I'm not a financial advisor. So before buying Bitcoin, you of course need a clear plan on, first of all, where do you buy? Do you DCA or do you use other strategies? Where do you want to exit? When are you wrong? When are you going to sell? When are you going to compound? You need a plan. Unfortunately, I'm not in a position to like say what you got to do. Do you prefer someone I copy his trades? Not sure what you mean, Challenger. But yeah, cheers, offline. By the way, if you don't have a plan and you're watching and you're curious, like, but Koen is always talking about a plan. How do I even build a plan? Follow these 6 steps. And I swear, if you follow these 6 steps, you'll have a great probability of becoming a profitable trader, right? But it will take time. And it will take a lot of discipline and effort. Now, hopefully you're in this market to be here for the next 10 years. Maybe you want to retire your parents. Maybe you want to care for your family, travel the world, all of those dreams. But follow the 6 steps. Exactly, offline. They're in every stream, I know, right? I mean, it's important for people to know. So step 1, right? Try as many free tools as you can. Just build experience in the market. You're not in a hurry. It's going to be there, right? But if you want to be a trader, you need experience. If you want to be a trader, you shouldn't care where price is, because if you're a trader, you can trade up and down, left, right, center, everywhere. At 100K, 10K, you're trading percentages. So take time, build experience with the tools and the indicators in TradingView, right? Step 2 is find your favorite tools based on your experience and build statistics. Get your Excel sheet out, right? Make a couple of columns and build statistics. Step 3 is to then combine some of these favorite tools that you build statistics on and now combine them into one and build statistics on the combination. So if the golden pocket, the VWAP and the 50 MA are at the same level, what happens, right? Do we get a bounce? If yes, is it 0.5%, 1%, 3%, 5%, right? If I would have put my stop loss 1% below the golden pocket or 2% or 3%, how would be my RR? Like data. You get the point. Step 4 is add a tool and remove a tool, right? Or both, or single, doesn't matter, but add tools, remove tools. Like you're now tweaking and adjusting. So step 4 is tweak and adjust. Add a tool, remove a tool, see what it does to your statistics. Step 5 is start trading it with a low amount of money and work on your trading psychology, so your head, which is the most important tip I can give you at the beginning in your trading career. And step 6 is start trading, increasing your portfolio slowly to get used to bigger losses, right? Follow these steps, which is my personal, literally story in a nutshell. and you have a great probability of being a profitable trader. You have a plan, you have a strat, you know what you're looking for, you got the experience with the tools, you build a strategy, you know when you have your edge, you know when the probabilities are in your favor, you know what you're looking for, you just execute, you worked on your trading psychology. So no FOMO, YOLO, cash nights, revenge trading, closing too early, all that stuff, like just follow the plan. So recommend some indicators for new traders. Generally, the ones that are most used, at least, are MACD, RSI, money flow indicator. I think one that is quite interesting would be market sessions and volume profile by Leviathan. So this is for volume levels, which does a pretty good job, I would say. So it's set on daily. So each box you see is 1 day, and then in that day, the red line is the point of control of the day. Then value area low, high and low are the two blue lines, and these can be used as additional support resistance areas on whatever time frame. But this is I put it on the daily. I don't use it myself because I use ATAS. The only reason I have it in my indicators is because I can show it to people. So that would be one to keep in mind, I suppose. RSI volume. I agree. I think CVD is actually also easy to use. So CVD ain't difficult. But I do recommend. It's almost sounds like a sellout, but it's of course not. It's just a YouTube video. If you wanna so I use CVD, and for me, I think it's one of it. For me, it's the best indicator out there. But opinions differ, right? It's just my preference. But I made a whole video about CVD, so you can check that out. And also in Discord, because I use it, I have a one pager about CVD, what it is in short, and then how to trade it or at least use it, right? The website I use, charts AGGR.trade, and my template is all in here. So so feel free to check it out. You can but it's about building experience with all of the different tools. Yeah. No. It's like the. Oh wait, I actually don't know if this indicator is only for paid people, but you can use TradingView for free. And you can use all of the tools and RSI and MACD and stuff. I think that's all part of the free plan. So yeah. Have you used moving average? I did. So I've in my step one, I've tried many tools, and moving averages was one of the things I looked at, but I don't use it in my trading. I've never really used it. I did observe it. I did use it, same with the anchored VWAP. I used anchored VWAP as well. I used the VWAP, but those are out of my way of trading. I like to be very simplistic, like less is more. And for me, everything I have on my charts during the videos is everything I use. I show everything. Everything I use in my trading is always in all of my videos, all of my live streams. It's there. It's just about how you combine it, and that's where experience and knowledge and having a plan comes into play. So yeah. So yeah. Cheers, Mark. Mark is the cheerleader here. I have 5K in right now. Should I sell or let it run? I don't know if you're long or short, but by all means, I'm not a financial advisor. So this is, if you go to the 6 steps, which I have explained 6 minutes ago. So if you go back 6 minutes in the live stream, you hear me talk about 6 steps that you need before you even enter a trade of that size. If that is a lot for you, you need a plan, and you don't have a plan. So that's the problem. The problem happens before you actually enter, which is not entering without a plan. So what you need, first of all, Raymond, so it's no problem to be in a long or a short with 5K. The problem is, of course, having a plan. So what you need is a stop loss and a target. You need to know where are you wrong, where are you right. And if you have a stop loss, which is an invalidation, you need to calculate how much you're willing to lose in this trade, and you have to accept that loss. It's risk management. Don't look at the profits when you enter a trade, look at the loss. So if you're willing to enter a trade, calculate your position size based on your stop loss and how much are you losing. So if you have 5K in and you want to risk 1%, you lose $50. And if you accept the $50 loss, then that's fine. So if price hits your stop, then that's it, it's fine. On to the next one. The problem comes that when you don't have a stop loss or a clear risk management plan, and you go into 10% drawdown, 20% drawdown, and now you start panicking and you're like, oh shit, what's happening? I'm in such a big loss. I was so sure price was going to go up, and here I am sitting at minus 500 or 1K or 2K. That is where panic comes in, and that is where hope comes in. Every tick towards break even becomes hope. Every tick down becomes fear. And that's a big emotional shithole. So what you want to do is know where you're wrong. So with your plan, have an invalidation, a stop loss, just put it in the book. Just put the stop loss in the chart, bam. If that happens, I'm gonna lose 500, 200, 300, whatever you want to lose, 150, 50 is 1%. If it hits, I lose this, but then I was wrong with my plan. So I now look for the next one. Should I sell or let it run? And what would I recommend is difficult for me to say, because I'm not an advisor. So I can only help people to develop their plans now. My ringtone 6 minutes ago. Dexter. Yeah. What daily naked point of your chart stands for, and how do you locate them? Daily naked point of control is DNPOC. So it's a daily naked point of control. And you can find them in many ways. Now, what I recommend, Afshin, is to look at this video here, how to trade naked point of controls. I explain more about naked point of controls here. Also, as you are a gold member, I also made a video about point of controls I think it was the volume profile. I'm not sure if I actually did point of controls. I think that's in the public video anyway. So I would recommend to check that one out first. Second, the way I find them is using Atas, which is an external software, and the templates are in Discord as well. So here. However, you can use a volume profile, and you just select a volume profile of 1 day of price action, and then the point of control, if it's not yet hit the next day, becomes a naked point of control. You can use what I showed earlier, market sessions and volume profile by Leviathan. So also here, the red line is the point of control, and if it is not touched the next day, you got yourself a naked point of control. So that's some of the tools that you can use. I personally use Atas, but yeah, there's other stuff you can use, I suppose. Wave 4 on the 4 hour is not yet invalidated. The impulse, oh wait, that one. The move down looks more 3-wavy than impulsive at the moment, yeah. But okay, everyone, it's time for me to go. I still have to do sports, which I actually planned for 1.5 hours ago, but I always love live streaming, and I lose track of time when I'm live streaming because I enjoy it. And then before you know it, here we are. But it is time for me to do some sports, do some other stuff, and then probably make a video later tonight because it's already almost 7 p.m. Central European time. Other coins and altcoins is for Sunday. Sunday's altcoin streams every Sunday. But yeah, thanks everyone for being here. I will make a update probably tonight, like later. Will take some hours because of the live stream. And I do have to do some other stuff now. Which includes doing sports, and I have a gold live stream coming up as well for the gold members. A private live stream to talk about some altcoins, give some feedback, talk trading. So for the people that are gold, make sure to come in. So yeah, cheers everyone. Thanks for being here. Trade safe, right? Have a plan, have a strat. Please have a plan or have a strategy. Don't just YOLO, FOMO, price is volatile, all that stuff, right? Make sure you know what you're doing. And that is pretty much the only way to long-term profitability. So yeah, thanks for being here. And we'll be in touch. Tomorrow is another day, another live stream. With regards to the summary, I'm going to upload a YouTube video tonight. So that's going to be the summary, pretty much. Probabilities on the weekly, bullish on the 4-hour, bullish till invalidation. In other words, probabilities on the weekly remain bullish until you lose significant levels. On the 4-hour, you at least need to lose 67.3K. Then you start to be bearish. Locally here, we're just ranging. We're going to continue to observe the range and see what happens. And depending on the range, we can reanalyze probabilities more locally. But yeah, that's at the moment that. So the gold live stream Afshin in Discord, you have the stream plan channel. That's why I wrote it. Usually it's about 7:30. If it's a bit, it might be a bit later because I want to do some sports. I really need to work on my legs, especially my knees. So yeah. Okay. So many questions. 45 at the moment is not yet on the plan. We first need to lose significant levels. That being said, it's time for me to go, else I'm going to be here forever. Thanks for hanging out. And yeah, I'm going to catch you at the next one. Cheers.